Good morning and welcome to the morning update here brought to you by the ETF Bulletin and Penn Financial Group. This is Matt McCall, President of Penn Financial Group and editor of the ETF Bulletin. Wednesday, June 19th, we're going to take a look at the market here, and it is Fed Day. What that means is the Fed is the second day of its FOMC meeting. They will release what they believe interest rates should be at, which nobody thinks anything's going to change. But the big news is going to be coming out whether they're going to taper, meaning that they're going to start lowering the amount that they're buying into bonds, into mortgage-backed securities each month, which is currently at $85 billion per month. We've seen a heck of a market here as of late due to this. Let's take a look here at the Dow Jones Industrial Average. We've had 6 consecutive sessions of at least triple-digit gains or losses on the close. A lot of up and down, as you can see, in the last 6 days. But what I do like to see is this blue line is a 50-day moving average. We've come down to this moving average of bounce. We've come down, bounced again, and then yesterday we closed at a 2-week high. This is very, very positive. The volume was pretty big on Friday. On Monday on the first bounce. This to me tells me that we're probably going to see some good news out of Bernanke, and by good news I mean no news. No news is what we want to hear here. We don't want to hear about tapering. Eventually that has to happen. I agree. I just think with the way the economy is right now, it's just not that good, and therefore I don't think we're going to hear anything about tapering at this point. And I think the market will hit new highs in the next couple of weeks. So that is the Dow Jones Industrial Average. Let's take a look at the S&P 500. Very similar chart, 2-week high, bouncing up the 50-day moving average several times. As long as we hold above that 50-day moving average, which is currently around 162 on the spiders, everything looks kosher to me. So, well, what's going to happen here with the Fed? We'll see interest rates probably move on this. This is the 10-year. The 10-year went from 1.6% in early May to 2.18 as of yesterday's close. This looks like a huge move, which it is in the short term. But let me show you a little bit further out. Going back to the 90s, I mean, look where interest rates have gone over the last 15 years or so. To me, actually 20 years. To me, we actually have a lot more to go in the next few years on the upside. It could easily go back to 5 or 6%. You want to stay away from treasuries due to that. It's not something you want to be looking at. I don't think we shoot up there immediately. As I mentioned, I think the Fed artificially keeps interest rates low because they don't taper yet. But again, watch interest rates because it will have a direct effect on what's going on in the market. Now, just a couple ETFs I want to take a look at here today. REM, which is a mortgage REIT ETF that we own for our subscribers. This baby is looking to move today. It's actually up. The overall market's flat right now, but this is up after some good news from one of its holdings. As you can see, it's come back. Almost every income dividend paying ETF and stock has got hit in the last month as interest rates have gone up. There's fear in a mortgage REIT sector, but it looks as if the yields on many of these mortgage REITs in this ETF are staying upwards of 16%. This is currently yielding 12.6%. I still think there's some upside potential, capital appreciation, plus that type of dividend. It's tough to not take a look here. And it's got strong support just below where it is at 13 and change. One of the ETFs I did for the ETF of the day recently, I'm telling you, I'm really liking this. This is CARS, C-A-R-Z, First Trust Automobile ETF. Came down to the 50-day, bouncing yesterday up 1.6%. Look at the volume coming in. This is one I think you should keep an eye on. I talked about this yesterday in my webinar, which we're going to post online if you missed that here later today. The big technology stocks also holding up well. Came down to the 50-day as well. This was an old high here in September. We broke it, came back, healthy pullback after breaking it. It looks like to me that we're starting a new uptrend going higher. Here's a longer term chart going back to late '08. Again, this is a multi-year high, so this is something I like here. Big names in here, Apple, Intel, Microsoft. I like the big cap names here going forward in the next 6 months. And last but not least, let's take a look at the U.S. dollar index as it's gotten hit pretty dramatically here as of late. After breaking out to a multi-month high, the U.S. dollar has come down. Again, this has to do with a lot of the tapering here of the Fed, interest rates going up, U.S. dollar coming down. That's what's going to happen. Inflation is going to occur, I believe, in my mind. Interest rates go up, the value of the dollar goes down. Not really great for our country, to be honest with you, but it looks as if that is where we are heading. All right, this is the wrap up here for Wednesday morning. Thank goodness it's not Monday. Wednesday morning, June 19th, 2013. This is Matt McCall, Penn Financial Group. Have a wonderful day.